Is it going to be a letter of agreement, and what will be new?
So what we're working on by the end of the month, as you mentioned, a letter agreement. You may remember the current letter agreement caps their capital at $3 billion, and the really new part is a much higher number than $3 billion. So it will still be limited, but we're looking to come up with a number that will get us through the next year and a half, 2 years. In the interim, after that, we will reach an agreement on changes to the underlying share agreement that allow us to chart a path for Fannie and Freddie out of conservatorship.
You've said it's process-driven and not calendar-driven, but for example, do you anticipate that within a year, Fannie and Freddie will be out of government control?
It really depends on how quickly they raise capital. So what we want to be able to do essentially is to some extent put their destiny back in their hands. They're going to be responsible for building capital. They're going to be responsible for hitting goalposts. So what we're going to be doing, particularly in the amendments to the share agreement, is setting up a bunch of mile markers for Fannie and Freddie to hit. But at the end of the day, they're the ones who've got to drive down that road.
How much capital will this letter agreement authorize the GSEs to retain, Director?
Probably about enough that will get them through a year and a half, 2 years. But this is really in the point of negotiation right now. The Secretary and I have not settled on a final number, but we're in the neighborhood and we're close. And I'm very hopeful that that will get done by the end of the month.
You say you're in the neighborhood of?
Well, I said the Secretary and I are both in the same neighborhood. We are very close on a number, but we haven't settled on one yet.
All right. You've talked about reducing Fannie and Freddie's footprint. Are there areas, are there products that you wouldn't want them to be in, jumbo loans, for example, or, other types of loans?
Oh, this is really going to be focused on de-risking. And so, again, if they're going to go to market, how do you look at products that don't have a high return? Keeping in mind, again, that Fannie Mae, for instance, is leveraged 1,000 to 1. So as a safety and soundness regulator, I really need to be able to make sure that the risk that they're taking is commensurate with the capital that they hold. And that's currently not the case. So I think some very modest reductions in risk. The major footprint will look the same. It would just look a little bit safer. And I think that's appropriate, particularly given where we are in the housing cycle and given the amount of leverage that these entities have.
You were asked a question last week by Senator Brown about, how you expect investors to get involved with these companies if every extra step you take actually reduces their profitability. What do you say to that, Director?
Well, first of all, I would emphasize, as a financial arm's length regulator, the responsibility to raise capital and to convince investors is on the companies, not me. I think I can help make this a safe and sound system where if somebody does invest in these companies, you can be sure that they don't fail again. Because I think the current situation is their leverage they have today, they'll fail during the next crisis. So how do we build them up in a way that I think them is sustainable? I think a number of the higher risk products that they do don't have really good returns on equity anyhow, so we could reduce some of that risk. And of course, it's worth keeping in mind that the smaller they are, the less capital they have to raise to get out.
How do you respond to some criticism that this is all just going to be money in the pockets of some hedge funds who own Fannie Freddie?
Well, it's not necessarily a concern of mine. I'm tasked with getting them to a safe and sound condition. That's my responsibility in the law. That's my focus. If shareholders benefit or shareholders don't benefit, that's incidental to me building up the capital. Again, I'll remind you, Fannie Mae is leveraged 1,000 to 1. I have to help them build capital or they would not sustain the next downturn.
Director, how long before Fannie and Freddie raises outside capital, and how do you anticipate that going? What will be the route for that, an IPO?
So it could be. Now, the first thing I think we need to do is start to retain capital, and I think we'll have to have a number of months of retaining earnings, so 6 months to a year of retaining earnings to show that track record and to build up that cushion before they can go to market. So again, emphasizing process-driven, not calendar-driven. I think the earliest you could see going to market would be the fourth quarter 2020, but 2021 is more likely the case. But I really do want to emphasize a lot of things need to be done before we can get to that point.
I also want to ask about the government's senior preferred shares. Have they been repaid? Are these potentially one of the bargaining chips you're using?
It's certainly one of the parameters. My view is fundamentally that the government's investment is being managed by Treasury, and while I'm going to offer my thoughts to the Secretary, it's fundamentally his decision to make. My focus is in getting Fannie and Freddie in a safe and sound condition.
You talk about competition, but a new competitor would have to raise tens of billions of dollars of capital and be on the national stage, and have a rate of return that would get investors to be attracted to it. Do you anticipate that happening? How long would it be before something like that would happen in the country?
So I really would emphasize, for me to be able to issue new charters, which I've called for, is going to require an act of Congress. So we all know that doesn't happen quickly. I think the important caveat here is you've got a bit of a chicken and an egg. If I don't have the ability to issue new charters or bring in competitors, then no one's going to try to compete. So I would at least like that opportunity to be able to issue new charters, bring some competition into this, and more importantly, reduce the reliance on Fannie and Freddie. If we have 5 or 6 of these entities, then no one of them is necessarily too big to fail. So to me, the competition aspect is as much about trying to bring financial stability to the system, to the mortgage market, as it is anything else.
So investors, if we're turning now to the court ruling, they believe a court ruling basically provides incentive for the government to negotiate a settlement on outstanding lawsuits. Does it? Are you looking to have a settlement made?
We're looking to rebuild capital, and that, to me, once we end the net worth sweep, which is part of our plan anyhow, then I think a lot of these suits start to go away. At the end of the day, to me, this is about building capital, and that's where I'm focused.
I want to point out that in a 2015 paper, you yourself, Dr. Calabria, wrote that the net worth sweep ignored the FHFA's duty under HERA to restore capital to the company. Yet, even under you at the FHFA, you continue to argue that the sweep is proper. Can you sort of coalesce those two positions for us?
Absolutely. What I'm trying to do is move forward. As I've mentioned, it's my intention to have us end the sweep, which I think is of questionable legality. But the point is, where are we going forward? I don't really think it's a good use of my limited time to rehash history. My time is, how do I get these entities to build capital going forward? That's going to require an end of the sweep. That's what we're planning to do.